Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Requesting all the participants to please stay connected. This conference call will begin shortly. Thank you. Participants, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Please stay connected. This call will begin shortly. Thank you. Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Please stay connected. This conference call will begin shortly. Thank you. Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Requesting all the participants to please stay connected. This conference call will begin shortly. Thank you. Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Requesting all the participants to please stay connected. This call will begin shortly. Thank you. Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Please stay connected. This call will begin shortly. Thank you. Ladies and gentlemen, you have been connected to the Q4 FY22 earnings conference call of Max Financial Services Limited. Please stay connected. This conference call will begin shortly. Thank you. Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Max Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amrit Singh, CFO at Max Financial Services Limited and Max Life Insurance Company. Thank you, and over to you, sir.
Good evening, everyone, and welcome to the earnings call of Max Financial Services for the financial year 2022. First, we apologize for having kept you on wait for a long period of time. We were facing certain glitches, but now our results have been made available on the stock exchange, BSE specifically, and even on our website. Today, I'm joined by Prashant Tripathi, MD and CEO of Max Life Insurance, and also Subrat Mohanty, Group Executive Banking Operations and Transformation at Axis Bank, and also a nominee director on Max Life Board from Axis. I will request Prashant to provide opening remarks and share the progress on Max Life's strategic journey, and then I will take you through the financial performance of Max Financial Services. Thank you. Over to you, Prashant.
Good evening and welcome, everyone. At Max Life, we take pride in being a purpose-driven organization. All the areas of our business, namely employees, agent advisors, partners, work with the purpose of inspiring people to increase the value of their life, which means a very sum-assured, focused, consistent player. And this purpose and our values have helped us be one of the most consistent players year on year. Our 5-year performance has had a consistent track record, and the 5-year CAGR is about 16% compared to the industry growth rate of 10%, which means we have a 6% overperformance with respect to industry over the last 5 years. And our market share has been improving year on year, and we maintained our rank of being number 4 private life insurance company. Our consistency is woven in our distribution channels, as we have grown equally in both proprietary and banca channels at 16%, which means both banca as well as proprietary channels have delivered equal growth rate over the last 5 years. Our growth has come with excellent financial outcomes for shareholders. We have grown our VNB at a CAGR of 25%, and with this rate, we have more than tripled our value of new business over the last 5 years. In FY17, our VNB was 499, and this year we are reporting a number of 1528 crores of VNB, with market-leading new business margins. Sum assured is the vector which is quite aligned to our purpose. I'm very happy to share that we've grown our new business sum assured at 20% CAGR over the last 5 years, and we are ranked number 3 in the private industry basis new business sum assured in FY22. Last 2 years were very different as well as difficult because of COVID. As you are aware, there was a big impact not just on people at large, but also on businesses. And this period actually tested the resilience of the life insurance industry and acted as a litmus test of a company's commitment towards its stakeholders. At Max Life, we were not untouched by the severity of pandemic. The pandemic had profound impact on the lives of many of our employees, agent advisors, and their families. Though we did not leave any stone unturned in driving 100% vaccination for them, we still encountered the loss of a few of our colleagues. While our heart goes out for their families, I'm proud to say that Max Life Insurance successfully weathered this storm by honoring the commitment of paying claims to our policyholders to ease the financial burden their families would have gone through. We clocked last year an industry best claims paid ratio of 99.35 in FY21. We settled more than 85,973 death claims in the last 2 years. Also, while fulfilling our commitment to our policyholders, we did not compromise on robustness of financial outcomes for our shareholders as well. On a 2-year basis, which is last 2 years of COVID, we have grown 16%, whereas the industry could grow only 9%. Protection business, which is retail and group included, grew a CAGR of 18%. Value of new business grew a massive 31% CAGR over the last 2 years and maintained a healthy ROEV of 18.5 in FY21 and 19.2 in FY22. This has been possible only because of the relentless efforts of our employees, agent advisors, and partners who are passionately driven by the purpose of our organization. Looking ahead, we believe that overall economy is not out of woods yet, and there are still uncertain times given the geopolitical situation and consequent implications on inflation and consumer demand. Further, we continue to be watchful for potential COVID waves, so we believe that the severity is going to be significantly limited. While we are watching the emerging situation very closely, life insurance segments of retirement, health, and protection space continue to offer great opportunities. Overall, for Max Life, we remain optimistic and confident about our future, and I would like to talk about the key initiatives of the business for Q4 as well as FY22. In terms of our overall distribution build-up, for the first half of the year, of course, there was a deep impact of Wave 2, as you may recall. However, our continued focus on building proprietary channels have yielded strong results in H2. And for second half of the year, we grew 19% as against only 8% in the first half. Our online proprietary business did really well. In last 5 years, e-commerce grew 6 times, and the number of policies sold through online increased from 8 to 21%. We continue to be the leaders in online protection sales, and this year we entered savings market as well, and thus the channel grew by 58%. Our success in online segment is driven by our SEO leadership position, which is best in class, as well as our strong conversion ratios, innovative practices, seamless integration with our partners and our analytics engine. We are passionately working towards becoming the ecosystem partner of choice. We have signed up partnership with 10 new fintech companies during the year, such as PhonePe, Flipbox, Insurance Dekho, Ditto Insurance, RenewBuy, etc. And also have worked with some partners to co-create disruptive propositions. Our vision is to continue our dominance in protection and scale up savings in coming times through our product innovations, new funds, and best-in-class issuance. Our offline proprietary channels, which means other than the online but own channels, a joint force of agency and direct sales teams. Offline proprietary channels focuses on building scale and profitability, and that's our desire on the basis of a very balanced product mix, which is a source of strong profitability for our offline proprietary channels. Within agency, our focus continues towards building top advisors and variabilizing agency for recruitment volume. Our number of top agents with greater than 10 lakhs annual business grew by 16%, and we increased our MDRT count this year over last year by about 28%. We have also launched Life Advisor value proposition with simplified and strengthened proposition, which would help us further attract more top agents. Being the pioneers in the industry, we have maintained our leadership position with more than 300 active IMS partners, and we have doubled our sales through this channel in FY22. At the same time, the focus on variable agency continues, and our variable agency contribution has moved up from 36% to 39% year-on-year in FY22. Overall, agent recruitment also grew by 26% in FY22. The real testament of these models and initiatives lie in how these initiatives are leading to better financial outcomes, and happy to report that in FY22, we have witnessed remarkable growth in VNB coming from these channels. On our partnerships, Axis Bank has grown over 18% over the last 5 years and grew 15% in FY22. In the last quarter especially, the growth was a bit lower, predominantly because of the high base of the previous year. And of course, January was impacted because of the Omicron virus. However, on a 2-year CAGR basis, Axis has grown with a handsome 23% cumulative rate. We are deeply integrated with both our large banker partners, tech platforms, be it interconnected CRM, marketplace, new insurance systems, or joint analytics, and we continue to work with the bank to drive and improve penetration through investment towards distribution, engagement models, and overall enhanced integration for policy issuance. Product innovation was a big drive for last year, and our focus definitely is towards redefining cutting-edge product innovation. To achieve our aspirations, we added many new offerings to our suite in FY22. The key highlights were as follows. Within PAR, we strengthened our PAR proposition with a product called Max Life Smart Wealth Income Plan, which not only helped the segment to grow by 22%, but also strengthened margin in FY22. Non-PAR was bolstered by offering introduction of new variants, focusing mainly on long-term income. And within ULIP, just about a week ago, we've launched a new ULIP design called Flexi Wealth Advantage Plan with industry best features of auto debit boosters, which we believe will help us in driving persistency, 5-pay whole life variant, and return of all charges. This product is expected to fortify our market-linked product offerings, and it also comes with a new ESG compliance fund. In addition to the regular products within savings and ULIP, there is a lot of focus towards building segments. Talking first about annuity and retirement, our focus on annuity is yielding exceptional results with about 65% growth in annuity business in FY22. With the objective of attaining leadership in retirement, we launched Smart Guaranteed Pension Plan and augmented our NPS ecosystem with offering across the spectrum of customer needs. We have received certification for registration of Max Life Pension Fund Management Company, a wholly owned subsidiary of Max Life. We are thankful to MP and PFRDA for their speedy approvals, and we are in the process of putting it all together so that we are ready to start our operations beginning Q2 of FY23. Within protection wellness space, FY22 definitely was a challenging year, especially towards retail protection due to reasons that we have been updating you on, predominantly because of supply side constraints owing to COVID-19. Now, those constraints are slowly going away, and those related changes seem to be getting completed. We ended the year with an absolute retail protection of about 419 crore, which was a degrowth of 12% year on year. This was, to us, a more tactical item because of COVID. I would like to highlight that in the last quarter, we did manage to grow our retail protection. So a large part of the growth was until the third quarter, led by issues generated by the COVID. But we remain committed to this line of business. This is, of course, one of the big four initiatives that we're trying within our organization for long-term success and scale-up. And the intent is to make sure that we continue to grow our protection elements. We also launched a differentiated term plan with industry-first special features like special exit value, premium holiday options, and with many such first initiatives, we have grown our retail protection more than 4 times in the last 5 years. We've launched critical illness and disability riders, which is our play in the health space to tap the opportunity of health and wellness. We are very happy to see the growth that the take-up of rider attachment has gone up, and we have seen a massive 64% rider attachment in Q4 of FY22, significantly higher than the previous year. On some of the customer measures, we remain focused. Customer satisfaction and customer obsession are extremely important to our organization. In FY22, the 13th month persistency of regular premium products went up by about 120 basis points to 84.8, and the 61st month persistency stood at 50.2, which is an year-on-year growth of about 90 basis. Max Life Insurance also tracks performance on customer experience through Net Promoter Scores, and during FY22, we witnessed a 5-point increase from 44 to 49, which is 11% growth on the NPS scores. As we have shared, and we actually held a special session about digitization, our efforts towards efficiency and intelligence. It's been a key priority item for our organization and absolute necessity to stay competitive. Our play in the e-commerce space actually requires us to really build the capabilities in digital space very differently. Our vision is to be a company that focuses on world-class customer experience through frictionless onboarding, seamless customer service, and proactive management of risk in a digital setup that is contemporary, secure, and inspirational for millennial workforce. In FY22, we have implemented various initiatives to achieve this vision. Namely, 46% of our infrastructure is now moved onto cloud. We launched M-Smart, a sales governance tool for agencies that has been well received with 87% adoption within agency workforce. Onboarding is made frictionless with new age cloud native and intelligent underwriting systems and integration with banker marketplaces. We've also revamped customer communication by providing omni-channel customer service experience. We're now addressing more than 1 lakh customer queries through bots every month. We upgraded 2 large enterprise systems, the first one being an HRMS, or HR system, on SAP SuccessFactors, which just got launched to support recruitment, onboarding, training, performance management, succession planning, leave attendance, payroll, etc. So it covers all the elements of employees. The other one is we upgraded our investment system onto SAP platform because our AUM has gone past 1 lakh crore and we needed a very robust platform. So that's also was done this year. We are leveraging digital and AI to augment employee experience, enhance top line, optimize effort, and proactively identify and manage risk. On new business front, we have built an award-winning solution called UX, a speech analytics engine, for customer insights, sentiment, call effectiveness, agent collaboration, and identification of cross-sell initiatives. On purchase and issuance, we have built risk analytics engines to identify fraud at policy application stage, which has led to 100% real-time risk prediction. On servicing side, analytics is deployed to predict consumers' propensity to pay, optimizing efforts on port of call, which has led to a 3x conversion rate in high propensity leads. People continue to be the most important element of our business, and as we shared last year, we were ranked amongst the top 50 workplaces consecutively for the 5th year. In 2021, we ranked 18th best places to work amongst the survey conducted by India's best companies to work for, and in the Asia region, we were ranked 55th for the first time. This also resonates with the scores of our annual employee engagement survey in partnership with Willis Towers Watson, which shares that our engagement score is 95+% always for last 3 years. We have started to take great steps towards our commitment to ESG. We have bold aspirations to drive organization towards sustainability, which revolves around 4 pillars: work ethically and sustainably, care for people in society, financial responsibility, and green operations. We have a dedicated ESG management committee to oversee our ESG actions and initiatives. We have fully integrated ESG in our investment decision making and have launched our first ULIP ESG fund in this quarter. We've also improved our gender diversity ratio from 23% to 25% in FY22, and we have set a target of 30% by FY25. Max Life has also been awarded the Excellence in Gender Diversity at the 4th BNI Summit and Awards by Transformance Forum. We have completed our carbon assessment in all offices, and we've identified initiatives to achieve the target of carbon neutrality by FY28. I'm sure all of you are eagerly waiting for our financial outcome. I'm going to hand over to Amrit to talk about our financials.
Thanks, Prashant. At MFSL level on a consolidated basis, our revenue excluding investment income stands at 22,084 crores, a growth of 17% in FY22. The consolidated pre-tax profit for MFSL for FY22 is at 389 crores, lower than last year, primarily on account of reserves created for pandemic and certain one-offs that were recorded in the same period last year. Moving specifically to Max Life update, Max Life individual AP has grown 12% to 5,514 crores in FY22. The renewal premiums grew by 19% to rupees 14,509 crores. 13-month persistency, as Prashant mentioned, improved by 120 basis point to 84.8, and 61-month persistency by 90 basis point to 50.2. The gross premium on overall basis has grown 18% to reach 22,414 crores. Product mix for financial year 22 remained largely stable and as per our desired mix, with par at 20%, non-par saving at 29%, ULIP at 37%, and protection at 14%. The first 9 months, we've experienced a slowdown in protection business due to the supply side constraints. However, as the experience started improving, we released some of those supply side constraints, and our total protection business grew at 34% in quarter 4. Retail protection business was arrested its degrowth and that was experienced in the first 3 quarters, and it grew by 4% in quarter 4. VNB is at rupees 1,528 crores, a strong growth of 22% year on year, due to both EP growth of 13% and improvement in new business margin from 25.2 to 27.4%. This improvement in margin is led by a combination of several factors, including introduction of more profitable product variants and repricing decisions, along with scale benefits. Max Life MCEV is at INR 14,174 crores as at end of March 22, a growth of 19.8%. Operating ROEV is at 19.2%, which, if you exclude one-off COVID impact, translates to a 20.1 operating ROE. The operating EV is driven largely by value of new business and unwind. We have experienced a negative operating variance of 277 crores, which includes COVID impact of 108 crores, and rest is primarily to strengthening of mortality assumptions. There is a non-operating variance of 64 crores, which is primarily because of positive economic variance experienced during the period. In financial year 22, gross and net claims were 3,170 crores and 1,964 crores respectively. We began the year with 500 crores of reserve earmarked to settle pandemic-related claims. We took an impact of approximately 100 crores in our P&L during the year to settle the excess death claim. Even though severity of COVID-19 has declined, as a prudent risk management framework adopted by the company, we are bolstering our overall pandemic reserve to a closing position of 500 crores in the balance sheet for any future pandemic-like events. Policyholder OPEX to GWP improved to 13.5% from 14.2% year-on-year. Absolute increase in OPEX was 11.7%. FY22 profit before tax for MLIC Max Life is 417 crores, a decline of 18%, primarily due to COVID-related provisions. The profit after tax stands at 387 crores. Our solvency is comfortable at 201%, and AUM has crossed 1 lakh crore mark, closing at 1,07,510 crores as on March 22. Now, we will be happy to take any questions. I will hand over the mic to the moderator to open the floor for Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Avinash Singh from Emkay Global. Please go ahead.
Yeah, hi. Good evening. Great set of numbers. So a couple of questions. Firstly, on that 500 crores of pandemic reserve that you have decided to carry on book, just would like to understand, I mean, as and when, how this reserve will be released